I'm not sure the numbers as reported for the first quarter matter that much because, of course, January and February were decent months in the economy, so you really only have a third of the time span reflecting the carnage that we're in the midst of right now. So I think it's going to be whatever semblance of forward guidance we get from companies that might give a little bit more color to analysts who have just been stymied by how many companies have simply withdrawn guidance. I watch the consensus estimates every day, and on a dollar earnings basis for the overall S&P for the full calendar year, about $1 gets lopped off every day. Just drip down, down, down as analysts, I think, wait for something resembling guidance before they adjust numbers further, but I think estimates are still going down.
Going down, Lizanne, as you said, every day, and also such a wide spread of estimates depending which broker you're looking at. Certainly the case for the banks, which kick off tomorrow. I guess even when we hear from some of the companies starting from this week and they give guidance going forward, it's hard for them to give accurate guidance based on the key outstanding factor, which is when the economy opens back up again. What's your take as to where, with the bounce we've seen in markets, where investors are expecting things to reopen? And if, say, we didn't get a reopening of some sorts in the month of May, would that be a disappointment to markets?
I think probably. I think the market is now coming around to the realization that this is not going to be at a moment in time where there's some directive that everybody can open back up. It'll happen on a rolling basis. And I think where we've had sort of extremes of hot spots, the epicenter in New York, I would assume that there's going to be a more sort of conservative bias in terms of when to open things back up, especially given sort of the concentration in a large city. I also think that you're going to have to go industry by industry to see not only where there's significant pent-up demand that could kick in quickly, but whether there's corresponding supply that comes back online quickly. So even if we had a scenario where much of the country opens back up, say within a month's period of time, making an analysis industry to industry is going to depend on both the supply side and the demand side. So I think the recovery across industries is going to take many, many different shapes with many different timelines.
So, Lizanne, how can you and other investors make a call on whether stocks or groups look cheap right now without knowing where those earnings estimates actually go?
You can't. I think valuation analysis is futile right now, keeping in mind that two things that are, I think, is persistent regardless of the environment. Even if we were in a normal market environment, I would always say two things. Number one, valuation is in the eye of the beholder and a function of what metric you're using to value, whether it's a stock or an index. It's not just about PEs, but also it's as much a sentiment indicator as anything else. Even though, even in a normal environment, you can quantify the P, typically you can quantify the E, but what investors are willing to pay in PE terms is as much a sentiment factor as anything else. And those factors are consistent no matter what the environment is. In addition, the fact that valuation is, even in a normal environment, a terrible market timing tool. There's literally no correlation between whatever the PE is at any point in time and what the market does in the subsequent 1 year. And all of those things are in normal periods of time. So I think valuation analysis is sort of a futile exercise. We can focus on technicals. We can focus on sentiment. Even there, you're somewhat limited because you could easily say the market was completely washed out technically back on March 23rd. Same thing with sentiment. But much as we needed a catalyst, which came in negative terms with the virus back in mid-February when sentiment and technicals were at the opposite extreme, we were way overbought, sentiment was way too frothy. It stayed that way for a while until we got the catalyst in the name of the virus. And I think the catalyst is going to need to be more than, say, just a bending of the curve. It has to be consistency in the bending of that curve and maybe something hopeful on either the vaccine or the treatment front.